Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Nitin Pachisia of Unshackled Ventures, the third in our series profiling new and emerging venture funds. How's your day going?
Great. How are you, Nathan?
I'm good. So we've got a video on, and you've got a whole wall of medals behind you. What's that all about?
That's some of them are mine. Some of them are my kids. So we're an athlete family. I play cricket on the weekends. My kids play baseball, squash, and a bunch of other sports. So I was about to throw a bunch of them away because I'm not much of a collector, but my kids are. So now they're all up on the wall.
Hey, if they earned them, as long as they're not just like participant medals, right? Then
I think we overdo medals in this country. For what it's worth.
Probably true. Awesome. Well, glad to have you here. So tell us about Unshackled Ventures.
Yeah, so we started in about 2014, and I think you and I met right about that time. The Unshackled Ventures story kind of started in 2012 when I first started my previous startup, and spent 6 months talking to attorneys about how should I go about transferring my visa from my previous employer, which was also a startup, but a more progressed startup, to starting my own company. And about 24 people told me, no, don't do that because you're on a visa. And I was like, no, that can't be true because so many immigrants have started companies and been successful. So I kept researching and eventually found the way that worked for me to start my company. The outcome was I ended up spending a lot of my time dealing with immigration and figuring out those pathways versus time that should have gone into working with my customers, building the product, shipping the product.
Yeah.
And so that journey, coupled with my partner and co-founder Manin's journey of as a U.S. citizen, child of immigrants, but he grew up here in Saratoga and started a company with a visa holding co-founder, and same thing, right? Here you have an American citizen who's spending a ton of time and slowing down because of just someone being on a visa. So we kind of said, like, this is not right? There's a big opportunity to really accelerate the success of immigrant founders, and there was a framework in our minds that could work without depending on the policy change. And that became Unshackled Ventures in 2014. So we took 6 months to do customer discovery and go out and talk to entrepreneurs, talk to investors, and see if there's an appetite for the framework that we were proposing. And fortunately for us, we were overwhelmed with the positive response. When you have very experienced angels, especially Indian angels, willing to put money in your company, and a lot of entrepreneurs lining up to say, this is what I was waiting for. You guys are doing something meaningful. It's going to save me so much time. That was our cue that this needs to exist. So we started in 2014 with a very simple objective of accelerating or helping immigrant founders succeed faster. We truly believe that the founders we're backing will succeed anyways, with or without us, but we can speed up their journey. And the way we do it is by taking over immigration for them and some of the things that are very unique when you are not from here. So if you look at the typical immigrant comes to the country through the school system or the corporate system as a young adult or adult, right? They don't have deep networks that they grew up in. So you now start thinking about, as an entrepreneur, how valuable is your network to you? When you don't have that, it suddenly becomes like you don't have a couple fingers. So instead of 10, you only have 8. What happens then? So we become that sort of friends and family network of these founders. And so we invest capital at pre-seed stage. We love investing right alongside the formation of the company. about half the companies we incorporated with our portfolio founders. And so that's the earliest stage we would go is when founders are ready to jump in. And then with that comes immigration support. We have a structure whereby we have an R&D lab where if the companies are not progressed enough, we can hire these innovators at that R&D lab to do the R&D. And when there's enough progress, they can transition to the company that they started. Or we help them structure their company in a way that they don't have to do all the legal finding, right? There's no ROI on them spending hours and days and weeks figuring out immigration. We can do it for them. We added an immigration law firm as partners in the fund because that's so core to us. So I can say we are the only venture fund with immigration attorneys as partners. And then the third thing we discovered where it makes a significant difference is access to customers and investors. So those are the three things we do: invest capital, take over immigration, and provide access to customers and investors.
Very interesting. Are most of your startups you're backing, are they already here in the US or they're outside the US wanting to come here and you're facilitating that? Or
Great question. Most of them are here. So really what we're looking for is the immigrant ethos, right? So if you look at the scope of what we would invest in is at least one of the founders or co-founders was either born outside the US or their parents were born outside the US. So, the typical definition of an immigrant. We're not trying to go out and source. I mean, the population of immigrants in the US is so large and it's disproportionately more entrepreneurial, right? So we have a huge opportunity right here within the US. And that's what we're looking to tap first before we look at global borderless entrepreneurship.
And it's a very noble cause and everything, but is there also a kind of an arbitrage opportunity? Maybe you're able to get either better deals that you otherwise could get or great deals at a better price, perhaps? Like, is there sort of a, you know what I'm asking?
It's a phenomenal business to invest in immigrants. Let me just put it that way, right? It's a pure play capitalistic approach. And the philosophy that we have taken is not to use the arbitrage as a means to get more equity or better price, but as a means to win the most aggressive deals that we want to invest in, right? So you think about like the most talented founder will always have options to take capital from the people they want to take capital from. And so as a new fund, what we have to ask ourselves is why should somebody take our capital over more established brand names? And the answer to that is because we solve for their time. Any founder who optimizes for their time is more likely to choose as their investors who bring more than capital. And it's not just about their brand. It's not just about what they've done in the past. It's about what are they going to do for this company. When we were building our previous startup, we took money at less favorable terms from firms like Andreessen Horowitz and First Round Capital because of the resources they brought to the table. Right. So think of our approach as, or the value add as a winning strategy versus getting better economic strategy. The better economics come from the stage at which we invest. So I mentioned we like to invest super early. And our philosophy is that by going really, really early, we're taking incrementally higher risk, but we're getting much better price by going early. And if we're picking the right founders, then the risk reward ratio is in our favor because we can make investments at a fourth of the valuation of where a seed investment would happen, right? But we're maybe taking 10, 20% more risk. So odds work out in our favor because we're now backing 4x more companies compared to if we were doing the same investment for the same risk profile at seed stage.
Are you seeing patterns? Before the call, you mentioned you've got about 30 companies already, which is impressive. Are you seeing clustering? Is it a lot of Southeast Asian or is it fairly, dispersed? Diaspora?
Yeah, so we've made 40 something investments now. I mentioned 30 plus as that's where clusters start emerging. But those clusters are more clusters in terms of technology, industries, types of problems being solved, less about origins. So we have portfolio founders from 20 something countries in our portfolio, all 6 inhabited continents covered. And, all the way from people on 11 different kinds of visas or green cards to who've now become American citizens. So it's a very diverse group. About 40% of our portfolio companies have a female leader, a female co-founder. And that's a testament to, there are clusters, but very diverse clusters. You know what I mean? Like you can find diversity in clusters. And if you're open to diversity of one kind, all other kinds of diversities follow. So we're very fortunate that we're working with a very diverse group. The clusters are more in the form of, for instance, we now have multiple companies in space tech. We have multiple companies doing verticalized enterprise software with machine learning, deep learning solutions. Multiple companies in the future of food space, future of workspace. So those are kind of the category clusters that I was talking about.
That's interesting. Very cool. So let's talk about actually raising the fund. You're on fund number 2, correct? How much?
Yes.
How much total assets under management, and how's that divided between the 2 funds?
Yeah, about 30 million under management. Our first fund was a proof of concept, $5 million fund. That was raised primarily from individuals, high net worth individuals, successful entrepreneurs. Our second fund is a 20 million in core fund, and then we do SPVs for follow-ons and special opportunities and stuff. This fund has a few family offices. We're very fortunate that we're backed by some of the most iconic families in tech, retail, finance, and healthcare. So the bigger checks kind of make up about 50% of the fund. And then we have 94 successful operators and entrepreneurs who make up the other 50% of the fund. And we get to benefit from their mind share and their networks. I mean, that's really been our MO in terms of the speed at which our portfolio founders can move. And I was mentioning the portfolio success aspect of the access to customers and investors. A lot of that has to do with how our community has contributed to that. It's not Manan and my native networks, right? It's not our team's native networks. It's the extended network of the entire community.
Let's get back to that, but let's start with that first fund. So raising the $5 million fund, and I actually kind of vaguely remember when you're out raising it. I think you got some good press and stuff like that, but maybe, you had this proof of concept. How did you actually get out there and identify high net worth folks to put that fund together? Tell us about raising that fund.
A lot of iteration, a lot of qualifying, learning from every meeting to understand which segment of investors would we have the most success with, right? And when you're raising, you want to optimize your time. You don't want to take every meeting that comes your way, because meetings are free, right? But it's taking your time. So what we started with discovery around different groups of investors, angels, family offices, and within them different types, location preferences. The one thing that we did a lot of and worked really well for us is, once we secured an investor, we knew that they believe in us, they believe in what we're doing, and then it was about activating them to open up their networks. Right? And so how do you make it easy for someone who's now on your team to help you? And so that's where I would say our operator mentality really worked well, is we would go in and do the research on what their network is or could be, and then go back to them with, here's 5 names that we would love intros to. And everybody wants, when you find something that you really like and you're investing in, you want to take it to your friends. The problem part is most of these folks are really busy. So what we can do as entrepreneurs is make it easy for them to identify who are the 5 people I should take this to, right? And so
And what were you doing? Were
worked
you
really
just
well.
looking at their LinkedIn network or something, or what?
LinkedIn networks, where have they, some of these people don't even maintain LinkedIn.
Yeah.
So, but we know their background, we know which companies they worked at. So we did some analysis to figure out who would they have intersected paths with.
Mm.
And, so wherever LinkedIn is useful, you use that. Where LinkedIn is not useful, you use other means. You have Crunchbase, through which you can figure out where times may have intersected with other people. There are other means.
Yeah.
So you just have to get creative, and that's what founders are really good at, is find creative means to get the information that you need to get
Yeah.
to your end goal.
You can skip this question, but who was the first person to say yes to you on that first fund? Because I think that's always interesting, right? Or
it's a yes, and we distinctly remember the meeting at which we got the first 3 commits together. So the first few people we went out to were people who we had worked with or for, who knew what we can do, right? So these are not cold emails.
yeah.
And so the first 3 commits were 2 folks that we had worked with, Osman Rashid and David Strauss, who were at No. Osman was the founder of No. David was the VP of products. And Shamik Mehta, who is my partner's dad, who refused to invest in my partner's startup because his co-founder wasn't full-time yet. But when we told him about what we're doing with Unshackled, he committed instantaneously, because he's been angel investing now for 20-something years.
Okay.
And he's seen so many of these opportunities where he wants to invest, but the founders are not full-time. They're dealing with their visas or something, or he invests and they spend too much time dealing with immigration. So anyhow, those 3 in one meeting room at Osman's office in Mountain View on a Saturday morning was our first 500K commit. The first unknown person to commit, unknown to us prior to starting Unshackled, was Brad Feld. And that was from a cold email to Brad, because saw that he cares about immigration, he cares about entrepreneurs. Wrote him a note about what we're doing, and he's like, I've been trying to solve this for a while. I've tried so many different approaches, or bagged so many different approaches. What you're saying makes a ton of sense. I'm in. So that was our and from there it was hustle.
Did that open up a lot of either more doors or more yeses? Because he's obviously pretty high profile.
Oh, yeah. Brad was great. He made a number of intros for us, and Brad's one of those people. If you make it tangible for him, again, recognizing that he's very busy, so we have to make it easy for him. We gave him a list of, I don't know, 20, 25 names, and he went through it in, I don't know, 10 minutes. I said, okay, here's the intros that I can make. These are people I think will resonate with what you guys are doing. And, what I mentioned before, you keep following the chain of nodes, and it just kept working from there.
Mm-hmm, mm-hmm. Interesting. And so that first fund, $5 million, 2 questions. How long did it take to raise that? And then how quickly did you deploy it and start thinking about number 2?
I think we did our first close in August. So we started fundraising in June. So June, July, August to get to first close. And then we did another close in December, which was to get to our target. Our original target was 3.5. And so we got there in December. From there, we started getting some inbound interest. So we got oversubscribed, and then at 5, we finally said, okay, we don't want to raise more than 5 at this time. So I think we called it final close in February. And the one good thing at that time was, until December, we weren't actively investing. So we were 100% just fundraising, which is not a luxury we can have anymore, because now we're managing funds, so we can only be part-time fundraising. We invested that between 2015, 16, and first half of 17. So 2.5 years to invest that, which obviously was a function of smaller checks and deal flow not at a volume at which we're seeing now, right? We were a new fund. So it takes time to build all that machinery. So yeah, middle of 2017 is when we activated the second fund.
And okay, great. How did that, so maybe let's talk about that. How did that change? What were your tactics or approaches? You had a portfolio, probably not any exits, or maybe some had raised further rounds, but how do you, I guess, two-part question. How do you know it's time to go raise that next fund where you're sort of ready? And then what was the process or approach?
Yeah, I would say I would equate that to very much the first fund being a pre-seed, where the goal of that first fund was to prove key hypotheses, right?
Yeah.
So if you look at it from a fund perspective, the hypotheses were, one, that we can build a pipeline of high quality entrepreneurs. Number two, that we can build a process to identify the right companies and founders to invest in. And number three, if we want to invest in something, they're going to take our money, right? Because we're selling money, which is a commodity. So why will you still have to prove as a new fund that when you want to invest in a company, they're going to take your money?
Yeah.
And so those are the three things that we really focused on proving, and took that into our second fund, which you can call the seed fund, where you're now actually building the full-fledged product. So, our team grew with the second fund. You're absolutely right. There were no exits. There was only directional proof in terms of the quality of entrepreneurs that we've attracted, what has happened with those companies in terms of downstream investing. To be honest, most of those Fund 1 companies are now becoming recognizable names, right? Because it just takes time to build companies. Nothing happens overnight. So when you're investing alongside founders when they're just starting out, you're adding another year and a half to that typical seed to exit journey, right? And so our story going into Fund 2 was, here's what we plan to do. Here were the key hypotheses that we proved. Here's the big opportunity. We can corner this entire market of immigrant founders because we have a value proposition unlike anybody else. We're going to stay disciplined. So discipline was a big part of that story that LPs looked at is, are you chasing shiny objects, or do you have a philosophy of staying disciplined to your strategy? And that played a big role. A lot of LPs after committing told us that one of the things that impressed them a lot was the discipline with which we were operating.
And define that for a minute. Does that just mean staying obviously true to the core thesis of Immigrants, but same check size, or
stage, valuation expectations? Because when we started Fund 1, we said, because we had already done customer discovery with entrepreneurs, we had a decent understanding of the range of check sizes, the range of valuations in which our investment would work.
Yeah.
Now, as a starting point, right? So going into Fund 2, we were able to say, this is the range we started with. Here's what we've learned, and in keeping with market expectations, because valuation ranges change as markets are going up or down, right? How hot the startup investing scene is. And so the discipline was more about, these guys said they would invest in immigrant founded companies. Are they doing that?
Yeah.
Right. So it's not when you are a big fund, you have the luxury of becoming opportunistic, right? So we are now being told by a number of our LPs, if you see a great opportunity, why not do it? Because it's coming to you because of this machine, this pipeline that you've built, the brand that you've built. And they are probably right. But when you're a focused company, just like with startups, that what we say is, when you're building something new, you got to stay focused to the absolute sweet spot type of customer. So the discipline part of it was, are we investing in customers, our customers being founders, who hit the sweet spot of our strategy? If we were diverging from that too much, we could be called a more generalistic investor, right? So we didn't know how much LPs weighed that, but we were doing it just because we were very focused on executing the right way. The other part of it is, and I now understand why LPs put weightage on it, because there are about 1,000 other venture funds, right? So why are we so lucky that a founder would take our money if we don't have a unique proposition for them?
Yeah. Yeah.
You have to ask yourself that question. And so I think a lot of that operator background, starting companies and looking at how do we focus truly on our sweet spot customer, helped us a lot maintain that discipline.
Yeah, good. And you added family offices to the mix. How did you identify a list or the right family offices and get in with them? Any tips or approaches?
Primarily intros from LPs from Fund One.
Okay.
We, some of the intros actually happened when we were raising for the first fund. Obviously, we were too small for them at the time, and so we kept building the relationship. And as we were executing on Fund One, we got intros to certain people, not because of their investments, but because of what they do. So, if you're the CEO of a healthcare company, we sought an intro to them to ask them a question specific to an investment we were about to make, right? That led us to building a relationship with them, which then led to, oh, you're raising your next fund. I'm very interested in what you're doing. And, so a lot of those relationships, some of those relationships came because purely investment intros. Some of those relationships came because of just operating intros.
Good. Did you have to, what's the fee structure on your funds? And did you have to do any special terms on that first fund or structure it differently?
No, being a small fund, we didn't do fees, because fees won't matter on a $5 million fund. Instead, we agreed with our LPs on an operating budget to run the fund, typical carry, and then in Fund Two, it's your typical fee and carry structure. And we kept economics consistent across the board, our LPs, because we didn't want to get into that ask of some people want preferential terms and some don't, or it just creates too much management.
Yeah, that makes sense. Good. Any where are you at in deploying fund number 2? If you can share that, and when do you start thinking about number 3?
We're about 55% deployed. We're thinking about 3, obviously, because that's the natural continuum. I can't say when we're going to be raising. SEC regulations and our attorneys aren't going to like that. So, but as we're deploying, we're seeing the strategy or the assumptions that we made going into Fund 2 working out as we expected. The deal flow continues to grow. We're now seeing 1,600 companies a year, qualified opportunities a year. So to keep that pace, the one thing that's significantly changed over the last year is we're now seeing inbound and interest from not just the rising star entrepreneurs, but also known star entrepreneurs. Known stars being, people that have built and exited companies before. And it's really interesting how that's playing out, because they're saying, we want to be affiliated with your brand because we're immigrant founders, and we know that this fund should succeed to create a lot more opportunities and founders like us. So and then the interestingly, the counter side of that is, if any of your leadership team is immigrants, there's a tendency to hire immigrants. And so some of our infrastructure becomes really helpful as they are building teams. Because the one thing you'll consistently hear from second, third, fourth time entrepreneurs is building team is the number one priority. And so what they look at is your immigration backbone can help us scale significantly faster when it comes to recruiting teams, because we spent a lot of time on immigration when we were building our first company with employees. So that's an unintended sort of benefit of our know-how and the team that we have on immigration. because of which we're getting access to these very successful people starting their next few companies. So as we look ahead, we think that mix will continue to grow in between, more of a balance between rising stars and known stars.
That's interesting. Yeah. 1,500 companies a year, that's healthy deal flow. Do you have any frameworks or other means for assessing and filtering through that many deals?
Yeah, a lot of credit to our team. So Maria and Lucas on our team are truly the architects of the pipeline management system that we've built. We, being operators, we keep every few months we revisit how we're spending our time, and is it doing justice to things that we should be spending most of our time on. So we keep a healthy amount of our time for portfolio service. So once that's the post-investment working with the portfolio time. And then the rest of the time on sourcing and pipeline management or investing, the process allows us to move quickly from at the front end of the funnel, from something coming in to qualifying it. And we've created a really fluent process, which we get a lot of credit from founders on how transparent our process is. So we published how we look at opportunities, and that helps the entrepreneurs know if they're a good fit for us, as well as what the process would look like. So it's a quick process at the front end of the funnel, and then it goes into for the absolutely qualified ones, which I would say is about 10 to 15% of everything that we see gets to an hour or longer meeting with at least 3 people on the team. But the one thing that we're very proud of that we've done despite the volume is everything that is referred to us or comes in cold is seen by at least 2 people on our team. So that does 2 things. Number one, we welcome cold reach. So our form is on our website. You can go there, click pitch us, and send us the information. It's more about the founders and a brief overview of the space and idea that they're working on, which allows our team, we're 6 people on the team now, it allows all of us to see that information. Every time that form comes in, goes into Airtable, hits all of our emails. So we have a quick skim of everything that's coming in. And then at least 2 people on the team are going to spend dedicated time to go through all that, qualify if we should move this to a meeting or not. That first meeting is always a video call. It's 20 to 30 minutes, very respectful of founders' time. We don't want them to just commute around or travel to meet with us. And that meeting is about identifying founder upside, right? The first video call it's less about the idea. It's more about how excited are we about this team, right? And so after that is when we start seeking founders' time. The one, the other part of it is we're just really sensitive about taking founders' time. So before we take a long meeting, we do a lot of research in the background. So two of our analysts are phenomenal at doing deep dives. And we have student fellows at universities who help with these deep dives. We don't like going into meetings and taking half the meeting for the founder to explain to us what's already in their deck or what we can find on internet, right? That's not good use of anybody's time. So this whole process, the reason it works at high volume is because we keep refining it and fine tuning it, almost like a sales playbook at a growth stage company, right?
Sure.
To see how oiled that is. That's how our pipeline process works.
Yeah, interesting. And I have to ask this: have you actually put money into one that came cold through the website, or has most been referred, or some blend?
Many. I mean, our very first investment, Pluto Shift, was cold outreach. Many of our investments are just pure cold coming in. In fact, what happens is we will get something cold through the website, and then the founders find out, oh, we know someone in common, and then they're going to ask them to send a note. And so we get that because now the network has become very, very large. So it's easier for most founders to find someone in common. In the early days, it wasn't that large. And so, but still, we get a lot of inbound, and we love cold. I mean, referrals are great, but referrals as a means of, let me put it this way, referrals are great to get insights, but not as a means to filter or disqualify someone just because they didn't come through a referral. So the way we use a referral is after we get to a point where we're now doing diligence, that's when we'll look at, oh, we know all these people in common, let's get in touch with them. And, instead of just relying on the referral checks or reference calls that founders provide, we'll ping all these people ourselves. And so that works more as an insight generating process versus a qualifying process.
My theory, and this is just has no basis in anything really, but as venture funds grow larger and older, they tend to use the referrals more as the filter, right? Like you see this like with newer funds, sometimes they welcome more cold email, but you think you can continue to accept and filter and process cold?
We will.
Yeah.
We have to. You have to recognize your customer. I mentioned a lot of immigrants are new to the country, right? They don't have the networks. Coincidentally, there's a very similar sentiment. So I've been spending a lot of time in the Midwest. I've been spending some time with veteran entrepreneurship groups, and I hear a lot of, they love what we're doing because they say, we're like that immigrant for Silicon Valley because we don't have those networks. So how do we go about it? And they really respect that. We don't care who is referring you. We actually underweigh the value of the referral itself. We overweigh what we're learning from the founders themselves. So we have to keep looking at, we have to look at everything that comes inbound. And it's a show of, it's a show of founders' confidence too, right? It takes confidence to put yourself in somebody's inbox with, here's an idea that I'm working on, and most people will say, like, this is a BS idea, or why are you wasting your time on this? So it takes confidence to put yourself out like that, and we respect that about founders.
A couple quick answer questions. Typical check size, lead or follow, and any patterns in priced round or notes or safes, like what's the structure look like?
We love to lead. So when there's an opportunity, 90% of the times we have led the pre-seed rounds. The check sizes have been between 200 and 400K as our initial investment, and then we keep reserves for follow-ons. What was your last question? Safe versus not safe? That totally depends on the structure. So we have templatized everything. So we've templatized preferred stock, and we've done that with founders at times because they wanted a price round. For speed of execution, a safe with side letter works really, really well.
Interesting. Great. Something you mentioned maybe 15, 20 minutes ago, you said the second fund, you've got 20 million plus you do SPVs. So is that, maybe tell us what that means and why, and is that just sort of be opportunistic when you see stuff, or what's the SPV?
It's mostly, the SPVs are just follow-on rounds in our portfolio companies, right? So as companies raise Series A, B rounds, we tend to not invest from the fund because we're not keeping reserves for those larger rounds. So in those cases, we go to our LPs and we say, here's a round being led by investor X in a company that's doing this, and we have this much of an allocation. So one of the very important things to note here is our portfolio founders really recognize the relationship that we've built with them, the trust relationship, and we're really fortunate how much they fight for us to give us an allocation. So it's one of the added benefits that we bring to our LPs is giving them direct access into these Series A, B rounds for them to participate through the SPV.
Okay. All right. We're almost done. This is great. I'll let you get back to it because you've got 30, 40 companies to attend to.
That's right.
what's the hardest part about sort of being on this fund too, and maybe it's that you've got 30, 40 people to keep happy now, what's the hardest part?
Oh, that's the fun part. I mean, personally, I love spending if I had a choice, I would only spend time with entrepreneurs. The hard part, I would say, is, or at least it was, the recognition that as an entrepreneur, I controlled every micro decision of the company. As the builders of Unshackled, we control every decision that we make about Unshackled. But when you're an investor, you control very few decisions, right? So you have to recognize what your place in the journey of the company is, and understand. We're fortunate that we have the understanding as operators and founders ourselves of what the founders are going through, right? So be available as a sounding board, be available when they want to talk to you, be available when they ask for advice, but not try to interfere, because that's not the place of an investor, right? And that was a process that took a few months to accept when we started, how our role has to be different. But other than that, it's, the hard part is simply, when you have this portfolio, you recognize that it's a gritty journey for the founders. And sometimes you hear stories of how some of these journeys are being made harder by other people, and that really sucks. But we're very fortunate that our portfolio founders trust us to bring those issues to us, and we can find ways to help them through it. I don't think there's much to say about hard parts of my job. It's really the best job in the world.
Your hard part is when your kid comes in second and doesn't win the trophy, just a medal for cricket or something.
If you're second out of, I don't know, whatever, 100 or so, participants, then okay, you get your silver, that's fine. But if you're second out of 3, don't bring them. I'm simply saying that from a perspective of just the competitive spirit, right? So I grew up in a very competitive society. When you're growing up with 1 billion people around you in India, you better be competitive, because you're going to have to kill your feed. And so I come with that kind of mindset. I think sometimes when you give medals and trophies and certificates for just being there, it dilutes the value of achievement for those who did achieve, and it reduces the competitive spirit. So that's a side comment. That's just too much of a competitive animal in me.
I agree. Very good. All right. If people want to learn more, it's unshackled.vc or .co?
Unshackledvc.com.
Unshackledvc.com. Okay.
Yep. And we were very transparent with what we do, how we do it. So there's a lot of content on our website about what we are most likely to invest in, what the process would look like. And the call for entrepreneurs simply would be just reach out. We have never told anyone that it's too early for us. So I know founders hear that from VCs a lot, and they think they should wait and prove something. Don't do that with us. We're much more likely to invest the earlier you are than as it gets late. So reach out.
One last question. How do you identify that, especially when you're doing, like you mentioned, you're investing in companies even before they're incorporated as a company. So what is it the common pattern that you're seeing these guys are good to invest in when there's not product or traction or even a company?
Yeah, it's hard. It's like going to the draft room, right? So you're looking for players with the highest upside. It's very similar. We're looking for founders who represent the highest upside. And some of the characteristics that go into identifying that, I'm not saying this is the only set, but some of the things that truly stand out is founders that are really curious. So they're experts at something, but they're also very curious about things that they don't know yet. They're also very self-aware of what they don't know yet. They strive to learn things that they're not an experts at. there's a silent confidence about that. So they're not insecure about what they don't know. They're confident of what they know, and they also know that they can learn what they don't know really quickly. People who are really inclusive and are not trying to do everything themselves, because you're going to tap out of your own bandwidth. And so people who recognize that. People are good with making decisions with limited information, right? Because that's what founders are going to have to do for years to come, is make decisions with limited information. So there's a lot of these, great adversity muscle that gets talked about all the time, because you will hit adversity. So we look for a lot of these soft aspects. The charisma, which is charisma is not just about influence, but it's about being able to communicate, for example, really complex topics in simple terms. Right now, that's charismatic. You can communicate. You're building satellites and telecom networks and whatnot, but you can communicate that in simple terms to people who don't understand satellites or telecom networks in as much detail. That's charismatic. So a lot of those soft components go into identifying that upside. And then as we get deeper into the process, we then start looking at, how does this relate to what you're doing now? Right? How does your expertise make you the best person to execute on what you're looking to do? And if you're successful, does that create a big enough of an opportunity to be a venture-backed company?
But a lot of those attributes are fairly soft. So are you determining this through the call and meeting? I mean, because you can't put that in a form so much, right?
No. This is interpersonal. Exactly right. So, and a lot of what we've learned is to ask the right questions. And the question, it's not the answer that really informs you. It's how it's answered that informs you. So it's still a judgment call. And I won't commit that we have now become, the best at it. We're still learning, but the beauty of our team is that there's a lot of different perspectives and personalities. So if I am underweighing something, someone else on the team is going to check me on that. If I'm overthinking something, someone on the team will check me on that. So I would say I'm the weakest link on the team. So everybody else, if you get to meet the rest of the team, they're just phenomenal people, really, really good at what they do. So as the weakest link, I would say we're doing really good work in identifying these soft skills or soft attributes. But you're spot on. You can't do that through a form or just one quick meeting, right? It takes time. And that's why most of our investments happen with at least 3 interactions, sometimes 4 interactions with the team.
My last question, I promise, then I'll let you go. Do you have one favorite question you like to ask to sort of identify and pull some of these soft attributes out?
Well, I don't know how much of a pull, but I really like to get into how the founders are thinking of the future by asking something like, if you are successful, all the plans that you laid out work out, what does the world look like? In 10, 15, 20 years, whatever time it takes. But if you're successful, what does the world look like? And it's fascinating to hear that from really visionary founders, how they think, even if they're working on something very boring, IT infrastructure type of under the hood thing, but they can really lay out for you what they are doing will make a meaningful change in the world. And it's just fascinating to hear and learn from.
That's a great question. All right, my friend, this is fantastic. Unshackledvc.com. Check it out, learn more. Thanks so much. We'll catch you after your next fund, and we'll see how the thesis or theme has changed at that point. Sound good?
Sounds great.
All right.
Thanks, Nathan.
Over and out.
All right. Bye.